Thanks, Andy. You know, it's interesting that in the last several years, the outstanding volume of checks that have been issued from on a yearly basis has gone down considerably. Major initiatives from the automated clearinghouse associations, from Treasury, which will be eliminating check payments by March of next year, and by customers themselves who are getting more and more used to the idea of using debit cards rather than checks, and using bill pay, are also finding that the numbers of checks that are presented to them each month in their monthly statements has been cut way back. So it's still a huge issue as far as fraud is concerned, however, and part of the reason, that we'll talk about today, is some of the very rules that banks have to follow. I was noticing the other day that we here at Bankers Online track special alerts that come out from the FDIC and the OCC for counterfeit checks, and those are usually involving things like counterfeit cashier's checks, or sometimes called official checks or teller's checks, and the numbers of those alerts that have come out have dropped precipitously. In fact, there's only been one alert from the FDIC this year, and there have been fewer than a dozen from the OCC. And as a result, you might think, well, counterfeiting is way down. Well, counterfeiting may be down as far as official checks are concerned, but there's still, I'm convinced, based on comments that we've seen in bankers' threads and elsewhere, that there's still a huge incidence of check counterfeiting and other check fraud that goes on that is impacting banks today. And the purpose of today's presentation is really to talk about how the counterfeit or bogus check industry has kind of shifted away from official bank checks toward business checks. The fact that there's two sets of victims in these crimes, either bank customers or the banks themselves. And finally, there's also the problem that many times when banks' customers are victims, they end up blaming the banks for their own misunderstandings of the way things work. So I'd like to start the presentation today with a few reminders of some of the things that we probably already take for granted, but they are important when it comes down to the steps that you can take in order to help protect your bank from fraud by check. And the first is a pair of definitions that are critical to our understanding of cashier's checks and teller's checks. You'll notice that over on page 2 of your handout, you'll see that there are some descriptions of the Uniform Commercial Code and the Reg CC definitions of a cashier's check, and you'll notice that those two definitions are not totally identical. The basic rule is that a cashier's check under the Uniform Commercial Code is that it's a draft drawn by a bank on itself. In other words, the issuer is a bank. It's drawn on the same bank that issued it. That's a cashier's check. Under the Reg CC, there's a carve-out, and the only reason there's a carve-out is because there's a group of cashier's checks that you would not have to provide the so-called next-day availability rule under Reg CC to them, and that would be those types of transactions that are not those that are provided to a customer of the bank or acquired from the bank for remittance purposes. For instance, a bank that issues an expense check in order to reimburse its employee for expenses, or an accounts payable check in order to pay for goods or services provided to the bank, is issuing a cashier's check under the Uniform Commercial Code if it draws those checks on itself. However, under Reg CC, those types of checks would be an exception, and they wouldn't be considered to be a cashier's check for Reg CC purposes, and you wouldn't have to provide same-day availability on them if the question ever came up. So the definition of a cashier's check is laid out in some detail on page 2. Similarly, on page 3 of your handout, there's a parallel definition for a teller's check. And the only real difference between a teller's check and a cashier's check is that a teller's check is drawn by a bank, but on another bank, or it's payable at or through another bank. So with a cashier's check, if you had ABC Trust Company issuing the check, it would be drawn on ABC Trust Company. With a teller's check, XYZ Trust Company might draw its check against ABC Trust, or it might draw it against Integrated Payment Systems, for instance, and pay it through ABC Trust. The difference from a practical perspective is limited. They're both liabilities of the issuing bank, and they're both cases where Reg CC will normally require that you provide next-day availability. The difference between teller's checks and cashier's checks goes back years and years and years, and frankly, it really is rooted in the old thrift industry where thrifts didn't have checking accounts, they weren't able to provide checking accounts, and they consequently, when they had to draw checks, they drew them on an account at a commercial bank, and those were called teller's checks. Or they might have been called official checks by those thrift industry participants. Thrift industry would have been savings banks and savings and loans. But since 1980, they've been able to write checks drawn on themselves anyhow, so even those parts of the banking industry today often issue cashier's checks. But it may come down to the point of view that a bank does or does not want to manage its own official check account. For instance, a bank might decide that it doesn't want to have to manage its own official check account, manage the outstandings, and do the S-cheat and all of those other things that come with the management of an official check account. So they may have all of that work handled by a third party, and they would therefore be issuing teller's checks. Or they might decide that they want to do the management, they want to keep the control, they don't want to give the deposits to a third party, so they'll issue cashier's checks which are drawn on their own internal accounts. From a customer perspective and from a Reg CC perspective, these are generally regarded as equivalents, and frankly, they're oftentimes also referred to as official checks. I used to work for a bank that was a trust company before it became a national bank. And while it was a trust company chartered under Massachusetts law, we issued treasurer's checks. And legally, they fit the definition of a cashier's check because they were drawn by the bank against itself. But we called them treasurer's checks because the chief financial officer in our organization was the treasurer, not a cashier. But legally, they fit the definition of a cashier's check, and they would be subject to any of the rules that apply to cashier's checks under the Uniform Commercial Code or under Reg CC. There's also that label that we've mentioned a couple of times called official checks, which is really not defined. It's a convenient term in that it sort of sounds like, well, official, but it also can be understood generally to apply to whatever it is that a bank issues that is the equivalent of a cashier's check, if you will. It can cover teller's checks, it can cover cashier's checks, but it doesn't have a legal definition in the Uniform Commercial Code or under Reg CC. In point of fact, it really doesn't matter what these labels are. It's really whether or not the check actually fits the definition. Over on page 4 of your handout, you really need to, all you really have to do is look at who signed the check and who's it drawn on. If it's drawn by the same bank that signed it, then it's a cashier's check. If it's signed by a bank official and drawn on a different bank than it's a teller's check. So those are essentially the